Hello guys, welcome to another session. Today we are basically looking at technical and fundamental analysis. Uh, we are going to focus majorly on technical analysis in this video. So I decided to break down this session into two. This is the part one. We are going to look at the technical analysis, and then the part two, we're going to look at technical analysis. So just to begin, we're just going to understand what fundamental and technical analysis is. So fundamental analysis is a way of looking at the markets through economic, social, and political forces that affect supply and demand. In other words, you look at whose economy is doing well and whose economy sucks. Majorly, it's the news that is traded in fundamental analysis. Good economy equals higher currency value, bad economy equals lower currency value. For example, as we speak, gold went far down south because there's the increase of recovery cases in corona, COVID-19 cases. That means in the US, so oil, basically, when we look at oil, we usually compare it with the US dollar. So the US dollar is strong at the moment. So that shows you why gold is doing far worse, because it's majorly compared to the US dollar. So it's all about trading the news. You get the news, then you get your facts right, and then you trade it. And technical analysis, this is the study of price movements. A person can look at a historical price movement based on the price action and determine at some level where price will move. It also involves a combination of one or two indicators to determine market trends of movements. So with price movements, we are going to look at them. We have price movements on the charts such as candlesticks. We have the doji. We have price movements such as the pin bars, the uptrend pin bar, and the downtrend pin bars. So we'll look at that when we get to the charts so that you can know what are the price movements. So before you begin doing your analysis on your charts, you need to make sure that your charts are always clean, that you have no indicator on that chart. It's plain, it's only the charts. If it's candlesticks, let it be candlesticks so that you can always have a good view of how the markets are moving. You need to view the market on a larger time frame and scale it down to a shorter time frame. It's usually advisable that whenever you're doing your analysis, you start from the larger time frame so that you can have a picture where the market is headed, or you can confirm the market trend. For you to confirm the market trend, you need to look it from a monthly level, narrow it down to weekly level, then to daily level, then to the 4-hour, and maybe then you trade on the 1-hour time frame. You need to find your entry levels on higher time frame and stop losses on lower time frames. This means that it's more of checking on the larger time frame, then coming down to maybe it's a buy. Now you put your stop loss on maybe the 4-hour time frame, and then you trade on the 1-hour time frame. So this helps you to do a good risk to reward ratio, which we'll understand when we come to do risk management. You need to execute your trades with a rule-based strategy. So a good trader is someone who confirms these trades based on the rule that he has in place. It's more of having this rule that you use when you want to execute a trade. Maybe you confirm whether there's a divergence. For instance, I usually confirm from my overbought or oversold region in the RSI. If there's a double top, if there is a RSI divergence on the top, that's my rule. That's the rule I use. So every trader needs to have like a rule that he or she uses before she can get into a trade. So you need to have also have like a few indicators, maybe one or two that you use to confirm your trade. So maybe you confirm that USD is a buy, then you need to go confirm from your rule. Do I have a double top or double bottom? Do I have a RSI divergence on the top or on the bottom? Is it on the overbought or on the oversold region? And then you execute according to that. The reason is this will help you focus on your emotions, because when it comes to doing analysis and trading, you'll always trade on emotions. You see the market going down, you cut out the trade, you make losses, you then buy, and maybe it's a fake out. So you need to keep it simple too, because simplicity is the key to success in trading. Don't overdo your analysis. Don't use more than 3 indicators. That's the rule I use. I usually use my RSI and the stochastic indicator when it comes to confirming my trades. So today we are, just like I said, today we are looking at technical analysis. So just to begin, what you need to understand when it comes to technical analysis, there are 4 things that you need to understand. Once you understand this one, you'll find it so easy doing your analysis on the charts. The first thing is the structure. The structure, this is basically the support and resistance. And then there's the trend. The trend is the market direction. We usually urge that you make the trend your best friend when you are a trader. Don't trade against the trend. It's a downtrend, get into a downtrend after retracement. If it's an uptrend, wait for a retracement and get into the uptrend. Candle price patterns. This is basically understanding the candlesticks and price action, which you're also going to look at. And then we have the indicators and how to understand how to use them. So we are going to start with support and resistance. So resistance is the highest point reached when the market pulls up and then pulls back. I'm just going to show you in a pictorial form, just understand what it is. And then support is the lowest point reached before the market pulls up back again. When the market passes through resistance, that resistance now becomes support. The more often price tests a level of resistance or support without breaking it, the stronger the area of resistance or support it is. So I'm just going to show you how to trade support and resistance. You only know it's a strong point if it has a support, a resistance, and it's broken by a big candle. So if you want to find a good support and resistance zone, you go to your charts and then look at maybe draw a line, horizontal line from the current market price. So from there, you look for that area, that region, the current market price. You make sure that there's a support, there's a resistance, and it's broken by a big candle. You can look at it from a larger time frame and then narrow it down to a lower time frame when doing your analysis. That's how I usually use my support and resistance. So you need to look for them above and below the markets. Then you need to draw your support and resistance wherever the market is, which is the current market price. If market fails to break support or resistance, a reversal takes place. If a point is broken by a long candle, it shows the point needed a lot of force to continue. So if it's an uptrend, you wait for a bullish confirmation. Maybe if it's in the 1 hour time frame, you wait for a bullish confirmation the next hour after it's broken by a large candle, and then you're sure to buy. Or if it goes downwards, then you know it's broken downwards back again. You wait for a bearish candlestick to form, and then you can confirm it's a sell. If a point is broken while the market is falling, sell. If not, buy. So I'm going to show you what I mean by that. So this is a pictorial form. We'll go to the charts once we're done with this. So I just want you to understand from a picture view. So this is USB card. We are looking at it on the daily time frame. So you can see this is what I'm talking about. The markets here are on an uptrend. If you can see, it formed higher highs, higher lows, higher lows, higher lows. It came back, broke it, and then went back again and formed a higher low. So this is basically an uptrend. So we are going to look at support. Support is that point where the market goes up, comes back down, and then it doesn't break. Then it just goes, then breaks. So this is the support and then the resistance. The resistance where the market goes up and then it's the movement it resisted. And then we recognize a downtrend movement. So this is a very strong zone because we have the resistance and the support. So just like I told you, a good support and resistance zone is a zone that was broken by a larger candlestick. So if you see this is the resistance zone, if you could draw a line, which I'm going to show you on the chart, you can realize that this is a big candlestick that broke. So in these regions, you need to be aware of fakeouts and breakouts. A breakout is basically when a large candlestick breaks the support or the resistance zone. And a fakeout is when a pin bar A pin bar is more of this green candlestick that has a short body or half body, and then it also has a tail. So this is a bullish pin bar. And then let's look at a bearish pin bar. This is basically a bearish pin bar. It has the red body, and then it has the tail. So that is a bearish pin bar. So this is the support. When the market's moving down and then the movement is resisted, that's the support. So the market supports the zone. And then the resistance, it's when the market's going up and then it's resisted. So that's the resistance zone. So when using support and resistance, you need to understand how to find what's the entry points. I think I gave an example. In the second example, you can see the entry point. He got the resistance, and then this guy, it came back to the support. If you like, you can buy from this point, because you can notice it's more of a consolidation in this region. It's more of a consolidation. So when they hit this support, you ought to have buy after this bullish candlestick. So I would have bought after the confirmation. Maybe the next hour I could have bought, and then I could have taken my take profit at this point. Or if it was on I was taking a trade from this resistance zone, I will take a sell. I will take a sell and then put my take profit on the support zone. So you can also trade on this support and resistance zones. Or maybe if you're a professional trader, you can always know when to get into the support and resistance zone. Or maybe you wait for a breakout. For instance, in this region, it broke out and then it formed another bearish bar, and then maybe you can target the number of pips you want. Maybe you could take your take profit at this area. So you look for another zone. I believe there was a zone, a strong zone on this area, so you could have taken your take profit. Then wait for it. If it's broken, you go with a sell. But now that it was not broken, you take a buy and you continue with So this is what we call a retracement. On an uptrend, the buyers try to put in too much pressure, but they don't manage to take over the buyer's strength. So the market continues with an uptrend. Okay. So the best 3 ways to enter trade is on retracements, on trends, and on breakouts and reversals. So when it comes to breakouts, you need to be aware of what we call the fake outs. A fake out is more of the pin bars that I was talking to you about. So let's just go to the chart. I just want us to do one example. We are going to use the USD yen. So just like I told you, the first thing you need to understand, let's draw it on maybe a daily time frame. So let's see what we have. So I'm going to, if you notice, I'm doing it on daily time frame because I told you you should do your analysis on a larger time frame and narrow it down to a lower time frame. So we are going to draw it at the current market price, which we have at 105.28. Yeah. So I'm going to leave it at that point, and then now we want to look at it. So let's make sure that this is a strong zone. So what do we confirm? We have to confirm that there's a support and there's a resistance in this region. So already we can see a support at this point. So we are going to make sure there's a resistance. I'm just going to scroll the chart. So sorry, just a minute. I didn't share my chart. Just a minute, guys. I need to share my chart with you guys. Yeah. Okay, so sorry about that. I forgot to share my chart with you. So this is on the daily time frame, the USD yen. So I drew my horizontal line on the current market price on the daily time frame. So we are at 105.32. So you can see I've drawn it. So we are going to make sure this is a support and resistance zone. So just to check, we're on this current market price. So we need to make sure we have a support. You can see there's a support on this region. So I'm going to make sure that we have a resistance, because we can see this is not much. It's a resistance, yes, but we're going to look for another one, a stronger one. So you can see on this resistance, it broke and then it faked out and then it came back again. So just to check another support and resistance zone, we have to check. You can see this is a support, another support. So let's look at, we are looking for a resistance. So we have to move the markets. Yeah, I think we have a good resistance at this point. You can see the market came and then it resisted. Came, then it came back, then broke, and then there was a bullish confirmation. So if I was to trade at this point, I will wait on the daily time frame. So I will take my trade after the confirmation, after the close. After this close, I would have taken my trade at this point. So let's see how many up to this strong point. So I will have taken like 52 pips, then wait for it to break again, and then continue with my buy. So this is more of patience. It's more of patience. For example, in this trade, we wait for it to confirm on that daily time frame. If it confirms, it breaks, we wait for a bullish confirmation. If it closes the next day, and then we can buy on a long term. So it's so simple. You don't need to complicate. You can notice it was also broken by a long candlestick. Always ensure three things. There's a support region on your current market price. There's a resistance. There's a resistance region on your current market price. And then the current market price is a zone that was broken by a large candlestick. You can see this large candlestick broke the zone. This one too is another one. And then this one too is another one. So it was already broken. So this one, the market is basically doing a retest because it already broke, came back down. Now it's retesting the zone. The markets, they usually like retesting the support and resistance zones. So you need to be patient. Just like I said, maybe this trade, we could check it on Wednesday because we have to wait for tomorrow. If it breaks today, on Monday, we have to wait for it tomorrow for a bullish confirmation. If we don't have a bullish confirmation, then we wait to see if the market is going to reverse. So it's that simple, guys. You can get a trade from this. If you've understood how it works, that is enough for you to be able to figure out your trades. Yeah, from the support and resistance zone. If you have any other question, feel free to text me on WhatsApp. You have my number on the WhatsApp chat room. So I could help. So next, we are going to look at the trend lines. We have one, the uptrend. The uptrend is when the market is, obviously, there's a lot of bullish activities. The downtrend is when the market is usually moving downwards. So the market is usually going up a series of stairs made of higher highs and higher lows. During uptrend, there's a pullback, the retracement that I just showed you when it's on an uptrend, and then you notice some sell activities. The sellers are trying to maybe put pressure on the buyers so that they can win the market, but they usually don't. So that's a retracement, or a pullback. So you don't sell, you buy after price retest. You wait for the retracement to try the retest on a zone, and then you buy. Uptrend line is drawn along the bottom of easily identifiable support areas. Then downtrend, on downtrend, the market is usually moving downwards, made of lower highs and lower lows. In a downtrend, the trend line is drawn along the top of easily identifiable resistance areas or peaks. So another trend that we have is the consolidating trend. The consolidating trend is generally interpreted as market indecisive. The market is indecisive on which direction to move. So it ends when the asset price moves above or below the more of the breakout or the fake out that I was talking about. When a chart is consolidating, you wait for a breakout, either upwards or downwards, and then you can wait for a confirmation, and then you execute your trade. Just as an example, in this one, I told you this was a consolidating area. You notice that the market is indecisive, whether to go up or down. So it keeps on retesting this zone. So you wait for a breakout, which either downwards or upwards. If it broke out upwards, you wait for confirmation, then you take the trade. Just that simple. Just understand it, make it simple. I told you in trading, if you keep it simple, you're going to stay profitable. Yeah. So that's one of the things that you need to notice. So I'm just going to show you an example of a downtrend. So these are basically the trend lines. When the trend is moving downwards, you can draw your trend line. So it can act as a support and resistance zone. That's how I call it. So you can see in this area, it went up, it resisted on this line, and then now you could have taken a sell and wait for it to maybe, you could have taken your take profit at maybe this level. So when it hits this level, you can take another buy, wait for it to go, it will come downwards. You can see it came back downwards. Then when it broke, it went upwards. So on uptrend, you can see the line. So I didn't draw the second line, but you can see it goes to this zone, comes back up, down, goes to the line. So this is more of a trend line. The market does not easily surpass the area. So if it surpasses, maybe a breakout, and then maybe wait for another confirmation that it's bullish, and then you can take your trade. Yeah, just like that. So this is the part one of our session. I hope you've understood all that the nitty-gritties that I've talked about, in this video. So if you have further questions, you can leave it on the comments so that we can work on that. If you feel like we didn't tackle anything on this, please feel free to talk to us about it. And we hope you find this insightful. Please share with family. Remember to subscribe, leave a comment down, and I hope we see you in the next video. So I'm going to work on the fundamentals, how to trade the news. You need to understand how to do technical analysis and the fundamental analysis. So next, we're going to look also at indicators as we approach the class, and then we'll also have the last video of risk management before you guys can start your trading journey. So thank you guys. I hope you find this so useful, and feel free to eat at our admins anytime. Thank you. Bye.